What's up, guys? Doing a little quick educational video here. What I do when I'm breaking down a chart and looking to see what's the key levels, what should you be looking for, is it interesting me, is it a good setup coming in for the coming day or the coming week, what are the key items I'm looking for. So just a little quick educational video, not taking any news into account, anything that's recently happened with the company from a fundamental perspective, just looking at the chart. So I'm going to go through two examples here. I'm going to go through work, which I've already done, and then I'm going to go do a fresh one with Disney. So looking at work here, I like to zoom out in. So zooming out means starting from the weekly chart. I don't like to look at the monthlies. That's something I'm really focused on. I'm focused on the weekly chart and below. So looking at the weekly chart is where we want to start. So first and foremost, we're just going to look at the trend. What kind of a trend are we in, right? So this stock was in a downtrend for a significant period of time, and we've had a character shift in this chart. You can see here we hit our bottom, we came up, we struggled in the zone, we came back down, we made a higher low, we struggled in the zone, we came back down, we made another higher low, and now we have a weekly breakout. So when you see a weekly breakout, okay, what do you want to look for next? That's a big, strong move. Do we have divergence? No divergence. How's the volume? It was increasing volume. So one of the key things I'm going to be looking for coming this week on work is because we've got a weekly breakout, we want to see increasing volume. So that's going to be one of the main items we want to see this week. Increasing volume to see extension, move, continuation to the upside. And essentially we could see a big move on this chart right now because we've broken our key resistance zone. And you know, it took a lot of people to make that happen. Okay, it's been trading in this range for 1, 2, 3, 4, 5, 6, 7 weeks. So 7 weeks worth of trades in order to break out of this zone after this initial dump from when the market dumped. So notable. A lot of positioning ready for a big move now. Now we look at what we see. What's our main resistance coming up right now? So our main resistance we should be looking at here is 32.48. And then afterwards, we're going to be looking up a little bit higher. So as of right now, no divergence, increasing bull volume. It's not the greatest bull volume, but 7 weeks in one zone to see a breakout. That's very intriguing. That's something that you have to take note of. A lot of new money has positioned itself in this stock, and now we want to see that follow through and continuation coming up. So then we zoom in, we go to the daily chart. So I want to look at the daily chart, look at some of the items I see. So, you know, I'll check out, hey, do we have any high volume nodes coming up? No, we've gotten into a very low zone. What was the volume recently on the daily chart? We got increasing bull volume. Okay, no divergence on the chart. That's great. It's a spinning top candlestick right now, so we created a little bit of new resistance. I'm just going to mark that here, 31.69. I'm looking at previous resistance on what happened here. Previous resistance. Have we just broken out and, you know, we're too hot now, we're too extended? Well, we came back down and already tested our previous resistance zone and created it as a support. So that's something I'm going to be looking for. Are we getting too extended now? Is it a chart that, yes, it's broken out, but it's too far away from me now that I have to wait on daily consolidation? When I look at this and I see, you know, it's just on its 2-day breakout after a key zone and it's already back tested its prior resistance and created it as support, I'm no longer worried about is it too extended. This is looking like a nice continuation name. Looking at the daily resistance, which is the weekly resistance that's coming up, 32.48. It's a key break on this chart, no divergence. Let's zoom in here. I'm going to check out the 4-hour chart. So the 4-hour chart, I noticed a couple of things right away. Okay, Kumo cloud is acting as support. So this chart had a breakout, off of our bottom. We had a breakout out of the Kumo cloud. When you break through the Kumo cloud, that is a major break in the chart. When you break below it is a major bear break in the chart. Bull break when you break through it, bear break when you break below it. Notable here, it acted as support. We came down, we were guided by the cloud. Support, okay, support. So we know we've used the Kumo cloud as support, and now it's getting a breakthrough away from the cloud, and the cloud will start to move up with this chart. So looking at this here, actually just want to make this visible here on the hourly chart. So let's do that here. So looking at this here, nice move to the upside. Potentially we're going to set up a 4-hour bull flag. So this is something that I want to be aware of going into Monday. Looking for a position on this chart is getting myself positioned in the bull flag. Now, the reason why I think there's a potential that we're going to see a bull flag here, and of course it'll also be impacted by what happens in the futures market over the weekend, is that we have tweezer tops here on the 4-hour candlesticks. We were unable to break that 31.69 the second attempt that we went for it. So this leads me to believe after a breakout, big volume, consolidating volume, which is very low volume, and that's what you want to see. When a chart sees a big move like this is a big move, it's an impulse move to the upside. When we start to consolidate, do we see big volume? And you don't want big volume because that tells you everything that just came in is also getting out. That's a red flag. When you see the chart consolidating and you see very small volume, that tells you it's very healthy, it's very steady, okay? And then you can position yourself as the bull flag starts to shape up. So I'm going to be aware of this, but not to say for sure that we do have a bull flag right now. We're going to see if it develops. I mean, you could draw the bull however you want. Actually, it looked a little bit better the way it was. So that's what I'd be watching in terms of the 4-hour chart. Now you can see here, this dotted line is, and let me just mute some notifications here. And that dotted line is the 8 exponential. So now if you think about it, we're getting a little bit extended away from the 8 exponential moving average. So when we start to get a little bit too far extended from the 8 exponential moving average, if you already don't have the Bollinger Bands up on your chart, you want to bring them up. I don't want too many things in my chart, so I keep them in the background and then bring them to the forefront. When I see that we're a little bit too extended away from the 8 exponential, I want to see, are we outside the upper Bollinger Band? And yes, we are. In this case, we're outside the upper Bollinger Band. That is normal after a breakout to be outside the upper Bollinger Band when you had a very tight trading range. This was basically a triangle, right? We had a triangle here that just got a breakout on the daily. And let's draw that triangle for you guys here. We could see it basically in this range right in there. So we just had a triangle, which was a tightening pattern, which was a tightening range. And when you have a tightening range, what happens is the Bollinger Bands tighten up. So you see the Bollinger Band up over here and the lower Bollinger Band. Let's just hide the Kumo cloud for you now so you guys can clearly see it. So you can see Bollinger Band is up over here and look how wide it is. Now look how contracted we got over here. Bollinger Band condensed because we're trading in a tight range. The Bollinger Bands contract, and then when you get the big impulsive move, they open up. So in this case, you know, if you say, hey, we're outside the upper Bollinger Band, it's too extended. Well, no, it's not too extended because you're not overbought in RSI. If you bring up the, let's bring up the MACD over here as well. You can see the MACD is just turning to a positive level, coming from a negative level, so I'm not too concerned about it. The Bollinger Bands will catch up to you, and let's bring them back up over here again, just so we can see that. Bollinger Bands will catch up to you. Now, the key is, now that they've opened up, and we've back tested it once, and we've held it, now we want to continue to hold it to the upside, and eventually, when you get too extended, the too far extended bands will open up, you'll see some consolidation, and you'll fall back inside of it, and that's okay. You're going to want that, you're going to want to cool down. But as right now, we are riding the upper Bollinger Band. So now we're a little bit detached. The bands have opened up. We have reached an overbought zone. So now I look at the chart and I say, okay, we are overbought. We are detached from the upper Bollinger Band. We do have tweezer tops on the 4-hour. This tells me consolidation coming. Let's watch what the volume is going to be like during the consolidation. We want healthy consolidation. That's what I would anticipate because I want to go back and remember, this is a weekly breakout. I should not be looking at this chart saying, yeah, I'm not too interested. No, we just had a key break on this chart. This might be the next all-time high runner that we need to be aware of. But I don't want to get in first thing right now. I want to get in on consolidation. Best way to track that consolidation now is going to be on the hourly chart. 4-hour chart is likely the best idea for your swing, you know, keeping track of the 4-hour chart. Looking for an entry, you're going to want to do it on the hourly chart. So you're going to want to watch the hourly consolidation. So you can see here, you know, we're struggling at our top. We have a little bit of a lower trend line that's been holding 1, 2, 3 touches. If we break this level here, now if we break this trend line and we're going to break these supports, short-term small supports. These are not dynamic support levels right over here because this is basically one move to the upside. We don't have a confirmed identifiable higher low on the chart. Okay, we have this little support over here. Okay, big wick that came in. We could be looking at this and saying, hey, this is a daily wick. It came off of the previous resistance. Likely this level might hold, but what we don't have is a very clear hourly higher low. You're going to use this. Well, this is not very clear. Okay, this is still a straight move to the upside. This is small consolidation on very low volume. okay, very low volume. It can blow through these zones very easily. Now, when we come back over here on this hourly chart, if we break this little trend line here and we come back down, we're going to look for that curl. And the curl is going to create the very identifiable higher low on this chart. Because if you look at this chart right now, I mean, let's look at it from a Heikin Ashi candlestick, right? Look at this. It's just one straight move. Now, if you don't understand what Heikin Ashi candlesticks are, I mean, just look it up. Maybe I'll do a video on it. Now we're starting to see that potential shift. So this is telling us we're going to look for that higher low now on the chart potentially. And then we'll have the clear identified higher low, which then somebody like myself who's not in this chart, who wants to be in this chart, who understands it's a weekly breakout, looking for some healthy consolidation on very little bare volume consolidation, I want to get in off of the higher low. That's what I want to see. I want to see the hourly come down and look for that higher low and then get that curl. So one of the things we could be doing is looking at this impulse move over here. And, you know, if you want to run it off your bottom, if you want to run it just before where the breakout happened, you know, be looking at this level. Anything above 0.382 is going to be huge. It's going to be great. But in this case, I really prefer that this chart, because it just had a key break, holds the 0.236. Key break on the weekly chart. I don't really want to give back too much. It's not really overbought. You know, we had this previous support, previous resistance come in and act as support. I would like to hold this level. I would like to hold 30.68. So if I do see a curl off of this zone, boom, that's going to be my entry. That's going to be, hey, I'm in this chart, whether I'm going to take it from a share perspective or I'm going to take it from a call perspective. Like the trade, we have to determine what's the trade going to be. But off of this level, I see a curl. I would go in and place a stop below that level. Now, it's one of those trades that you got to stick with it because it's a weekly breakout in the chart. You don't want to look at a weekly breakout and then, you know, you play 1 hourly candlestick and then you stop out or you look for immediate satisfaction. You know, it doesn't break to a new high and you're like, I'm out of the trade. Well, that's how you don't let trades mature, and that's how you don't catch big trades. If you're looking from a scalp mindset, stay tuned this weekend. I'll drop a scalp video. But in this case right now, what I would be doing is if I saw the chart come down into this range here, right? If I saw the chart come down into this range and it made a higher low off this level, I'd be in. I'd be very much intrigued and be in. And reminder, you have to take a little bit of risk to get a little bit of reward. You have to. So if you do get stopped out in this case, let's just say the chart, you know, then comes back down and, you know, fakes you out and it comes and makes a new low, but then it comes back down to this level and makes a higher low again, weekly breakout. I'm going to do it again. I'm going to stick with the trade, and that's what it means. Stick with the trade. You might have to take a loss or two, and you want to take that loss. You don't want to just hold because, yes, what if it is a weekly fake out? What if the S&P 500 rolls over and now we're just bought the top of Zoom? So you want to be protective and you want to have good risk management. So you want to keep your stops in place. Again, I would wait for the curl off of a key zone. I'd be looking at this zone because we have a support right over here and we have the 0.382 in that zone. So if we get in this trade, if it starts to show us signs of a curl off of this level, what does a curl look like? You can watch it on the shorter time frames. 15-minute, starting to show you a little bit of a trend change. Hourly, starting to show you a reversal hammer, a big lower wick printing, something along those lines. And Morningstar candlestick, those are the signals that you look for off of these levels. If you're anticipating that the Morningstar candlestick or a bullish reversal hammer will happen near this level, you'll be prepared for it. You won't be like, oh yeah, but you know, you're aware. That's the level. That's the 0.382. That's 30. That's the zone we want to hold. We're starting to see signs. Low risk entry on a potential weekly breakout name. So that's the stuff I'm really looking for when I'm, you know, scouting a chart. Really want to break it down. You can get into the weeds a little bit more, but let's just go to a different chart. Let's start off with Disney here. Let's go to the weekly chart for Disney and let's look at this chart for example. What are we looking for right now? Okay, look at this volume. Big volume came out. Now, as of right now, this chart hasn't really set up a weekly higher low. It's kind of just been one slow move to the upside, but this week we had some increasing bull volume and we closed at the high of the week. That is very notable. We closed very strong. We have a weekly resistance coming right up, coming next week. And after that weekly resistance, we don't really got much. We'll look at this level over here, which is going to be a daily level, but the Kumo cloud is all the way up at 125. We got low volume nodes popping up here. Let's run a weekly fib here because you can see right now, this has been a very sharp move to the downside since the coronavirus situation. So let's look at this chart and see where we are in relation to the fibs right now. Okay, so let's look at this right over here. Now we just got over the 0.382. Okay, and we close over the 0.382. We have not been able to close over the 0.382 this entire time. So now we're looking at 116. That's the next fib. And at 116, you can see there's going to be a little something here, right? 116.23. So let's zoom in right now on the weekly chart. We like the volume. We're going to want to come up and break this 112.70 on this week and look for continuation on this move. Let's look at the daily chart here. Well, let's take this off because I already had it. Well, I already had it drawn, so let's just keep it on and look at it. So 112.25, that's the level we're going to be looking for this week. I can see here we do have a channel right now. Okay, we do have a channel and we are trading inside the Kumo cloud. Inside the Kumo cloud is a choppy chart often. You prefer charts that are either outside the Kumo cloud, bullish if you're playing bullish, bearish if you're playing bearish. You want it below if you're playing bearish, above if you're playing bullish. In here it can get a little bit choppy. That means we've been, we had a serious dump down. We got a very big cloud in here, so it could get a little bit indecisive. As we could see here, we already made a move up to the daily cloud. Okay, we've already made a move up to the daily Kumo cloud, and we rejected it. We did not get a breakout. Now we came back down. We back tested the bottom of the Kumo cloud, and we held it as support. So top, bottom. And now we've bounced again. We've left a little bit of a gap behind. We don't like this basically doji candlestick at the top of a move. So on the daily, I start to get a little bit of concern because this is a doji candlestick. Although the week had some good volume, you can see a lot of that volume came on the earnings day. So we looked at the weekly volume. The weekly volume looked great, but now you can see a lot of indecision. Okay, a lot of indecision, spinning top candlesticks, and another indecision candle. So although the weekly chart was showing us some signs of promise, now the daily chart is starting to show us some signs of pause. Doji on volume, indecision. Bulls and bears fighting up in this zone. Now if we look at our last move here, our last retracement, and we look at where we've bounced to, this looks like we've bounced to about the golden pocket here. So now let's look at this from a golden pocket perspective. Where are we? Okay, we're above the golden pocket, so we came up to the 0.786. So decent bounce. Now the 0.786 also lines up with this zone over here, which is a real body, a wick, a real body. We've struggled a little bit in that zone, so I'd be a little bit cautious now on the daily chart. Not loving this one as much as I was loving work. Plus we've left a little bit of a gap behind. Leaving gaps behind on indecision candlesticks are red flags. Right? If you had a big bullish Morobuzo candlestick right now, where we closed, extremely strong, we had a big bull day, big bull volume, then I'll say, okay, hey, we're probably going to get some continuation and we're going to look forward. We've got resistance coming up. We're inside the Kumo cloud. We've left a gap behind and we have an indecision candlestick. Starting to get less intrigued in this chart. And we have a channel here that we've been choppy in. So less intrigued on this chart right now. Let's just zoom in. We'll look at the 4-hour chart. And let's just take off everything that we just drew here. If I was doing this for a technical video, I would have saved those drawings. And if I was doing it for a trading chart, I would have saved those drawings. But just because we're starting fresh here. Okay, looking at this chart right now, you can see here what I mean by choppiness inside the Kumo cloud. 4-hour chart. Look what happens inside the Kumo cloud. Up, down, up, down, up, down. Look at this. Like if you were playing this, you're getting faked out. You're getting higher opens, fade, higher opens, fade, higher opens, fade, higher opens, fade. Traded sideways, bull break. Finally, outside the cloud, you had a nice break, came back down, tried to hold it as support. We just fell into it, and now we finally got a break out of it. So that's a little bit good. The 4-hour starting to look a little bit better than the daily. Okay, 4 hours starting to show us a little bit more better signs than the daily, but ultimately still the daily is not as attractive, leaving that little bit of a gap behind and seeing indecision today. And we'll do one more. We'll zoom in. We'll check out the hourly chart and see if we can see anything else. And you look at the hourly chart and you say, hey, we had a move to the upside here. We haven't looked for patterns. We've been looking for trends. We've been looking for volumes. We've been looking for how does the chart feel right now? But as of right now, you could say, hey, potentially we do come up near that 112.70, and then we'll set up an attractive trade because we potentially have the opportunity to set up a cup and handle pattern. So you want to look at trends, you want to look at volume, you want to look at support and resistance, and you want to look at patterns. So as of right now, I just see a pattern potentially developing here. So this pattern is pretty interesting. This isn't an uptrend. The left side isn't an uptrend. We're looking for the right side not to break the left side of the cup that we've shaped up. Now, when we set up the handle, and I will be doing a video on patterns in the coming weeks. When we set up the handle, we want something that's nice and contained, potentially in a nice small channel. We don't want to give back more than 50% of the base of the cup, which would mean we don't want, wherever this handle forms, you know, we're going to look at this move here, that's $12.85. We don't want to give back more than $6.42. So we'll be looking at it from the midpoint, which essentially I should have just used this tool over here to show you that if our handle started from that point, we look at the bottom, we're not going to want to break below here. So as this handle forms, and we look at it from a downward perspective, we're not going to want to break that level right over here, which essentially is just about to line up with the Kumo cloud. So notable, those are the things that I look for. I'm looking at the trends, I'm looking at the volume, I'm looking at what's happening with the chart. Where do I think it's going to go based off of what we're seeing in the past, and what's the chart doing now? What's its new behavior right now? Disney's still looking like a little bit of choppiness coming up. Work looking like a big move potentially, and a top watch stock to move on to the coming weeks. So that's what I do when I'm breaking down the charts. I'm really looking at it, zooming out, zooming in, looking at those key characteristics. Hope you found some value in this video. If you did, don't forget, give us a thumbs up, leave us a comment. Peace out, everybody.